All right, Jenny, we are live and recording. Here comes the intro. You're listening to the Grow Clinton podcast. Grow Clinton is a 501c6 nonprofit economic community development and tourism organization based in Clinton, Iowa. For more information, visit growclinton.com. Again, that's growclinton.com. Now, back to the show. What's happening, all you beautiful listeners out there in podcast land? Thank you so much for tuning in to another episode of the one, the only, the Grow Clinton podcast, sponsored by a bunch of people. We'll get to them.
So lucky.
But performed by Jenny and Andy from Grow Clinton. We are a small economic development nonprofit located in the eastern side of the great state of Iowa, right along the mighty Mississippi, where we focus on economic development, community development, and tourism. As always, I'm your host, Andy, with Jenny as the sidekick, bringing you the best of what's happening here in Clinton, Iowa. Jenny, how you doing today?
I'm good. And I got to tell you, I want to say it one more time.
One more time.
Love it when you say along the mighty Mississippi.
Along the mighty Mississippi. That's because I believe every state, at least in the lower 48, has a Clinton.
I think you're right. I think
like
everyone does.
Everywhere I go, it's like Clinton's here, there. So I got to say Clinton, Iowa.
Clinton, Iowa. We're proud of it.
We are proud of it. You know what else we're proud of, Jenny?
Our sponsors.
Our sponsors. Mic check, courtesy of Citizens First Bank, making your finances and our audio crystal clear. These new mics in the Grow Clinton podcast are proudly sponsored by the bank that's always in tune with our community. Find them at gocfb.bank. Banking as it should be with Citizens First Bank. Member FDIC. AdCraft Printwear and Sully Sports. Jenny, did you know AdCraft's been around since 1974?
I'd heard that.
Over the years, they just served the Clinton community, but now they have a cutting-edge operation providing top-notch customized printwear to teams and companies all over the United States. For all of your custom printwear needs, AdCraftUSA.com. OG sponsor Miles Communications powers the Grow Clinton podcast, offering us wicked fast, high-speed internet services. They also offer television and telephone options to meet your home or company's communication needs. If they're not in your neck of the woods, they are on their way. For more information, milestelephone.com. Again, that's milestelephone.com. Last but not least, LyondellBasell is a leader in the global chemical industry, guided by the purpose of creating solutions for everyday sustainable living. LYB, as they're also known as, is one of the world's largest producers of polymers and a leader in polyolefin technologies. Did you know what that was before you had this job?
No, I didn't. And now, you do know what it is, but you don't know it.
They're everywhere.
You look.
You cannot be in your house without finding something where those polyolefins and all sorts of plastic resins came from Lyondell right here in Clinton.
They understand it.
Yeah,
that's what's important.
Resins that are used in a variety of products.
Yeah.
Household and industrial bottles, pressure pipes, PEX tubing, food packaging, kayaks, roofing materials, toys. LyondellBasell is committed to being a responsible and engaged neighbor in all the communities where they operate through volunteerism, charitable giving, and partnerships with local organizations. LYB aims to strengthen communities by supporting education, sustainability, and safety initiatives. LyondellBasell, solutions for a better tomorrow. Great show today, Jenny.
I know, and I'm so excited.
We have the one, the only, Ted Huff is joining us. And you may not recognize Ted, but Ted's an OG Clintonian.
He really is. I know. I'm so proud of that, too.
Born and raised in Clinton, a graduate of Clinton High. But now he is the OG of financial technology.
Yeah.
Fintech, Jenny.
I know. And this is something I hadn't heard of. I'm sure that surprises you. Up until, Fintech Confidential, I didn't know. And now I feel like I'm so far behind.
Yeah. Well, Ted came to the studio to use our space when he was here visiting his family.
Yeah.
And we were talking about downloads and podcasting. And, I knew he had a podcast, but then he's like, oh, you should use this program because you have an audio podcast. You can create these little snippets and reels, and it's really cool. It's AI generated, and it's free if you have less than X number of downloads. And then he's like, but I pay this, and this. And I was like, how many downloads do you have? And he surpasses us. But ladies and gentlemen, Ted Huff of Fintech Confidential podcast. Ted, thank you so much for joining us.
Thanks for having me on. I'm excited to be here with you guys.
So Clinton native, born and raised, right?
Well, not quite born, but definitely raised. Been in Iowegian my entire life, so I can claim that at least. But about I think I was around 14 or so, And, every 14-year-old boy loves to hear this from his parents. Hey, by the way, we're moving across the entire state away from all of your friends.
Oh gosh.
But that happened, but it could not have been any better than what it was. It was fantastic. Turned out to be much better than I could have ever imagined.
Yeah.
Nice.
So your sister's kind of a local celebrity
She
too.
is
Everybody
a big
knows.
celebrity. Yes.
Oh, you had to bring her up, didn't you, Andy?
Well, her laugh is contagious. I should make it my ringtone.
Her personality is contagious.
Yeah.
She's really a lot of fun.
So
she's fantastic.
Yes.
You graduate Clinton High, and then where'd you go from there? And how did you get involved in what's known as financial technology? And what is it?
Oh my gosh. So after graduating from high school, I went into the military. I went to college. I did a whole bunch of stuff. There was 1 year where I had so many W-2s, the tax guy charged me extra.
Oh, yeah.
Because I was just trying everything. But what ended up happening is a friend reached out and said, hey, you do this computer stuff, right? And I was like, yeah. He's like, I need your help. And that was the day that sparked me getting to financial technology. I helped them install software that helped them accept and send payments. And I just ended up going down a rabbit hole.
What year was this?
You're going to really make me say this, aren't you?
Well, I want to know. Before PayPal, before Venmo.
So this was 98-ish.
Wow.
Wow, you were right on the cutting edge of it then.
99's when I used my 98, 99's when I officially was employed by a company in fintech. But it definitely caught my attention.
Oh, very cool. So fintech, financial technology, what is it? Why is it important? And like, who is your target audience through the Fintech Confidential podcast?
Yeah. So the funny part is, I was just reading this morning an article, and the funny part is we look at it is that fintech is basically everything now in current state of the economy. Because we look at financial technology, at least from a Fintech Confidential and my advisory firm, we look at fintech as being anything that moves something of value. Meaning, if you want to send money to somebody like a PayPal or a Venmo, if you want to accept payments like a Square or a Cash App, something like that is financial technology, definitely. But one of my favorites that I go back to is that early in my launching of Fintech Confidential was a company called PTO Exchange. And the really interesting about PTO Exchange is that what they did is they allowed businesses to give their employees access to the capital that was sitting behind their paid time off.
Oh, very cool.
And so to me, that's really what flipped the switch for what fintech really is. It's not about, can I send you money? Can you send me money? It's really, how are we transferring the value, and what is the technology we're using to do that?
So are we talking about, is it more helpful or more beneficial for financial institutions, or is it better suited for individual finances?
Oh, so it can be used everywhere. That's the part this is what got me drugged down that rabbit hole.
I can feel it. Yeah.
Because it's not just one thing or another. It's not this or that. It is so encompassing of just about everything. It could be a financial institution that's trying to figure out how to serve their customers better, how to serve their board better. We look at credit unions a lot of times. Their focus is on the members, and how do we get the most value to the members, and how do we give that money back into, like, how do we reinvest into that? And then you've got community banks, like one of your sponsors, that is really focused on how do we help the community grow? How do we keep that economic development going on? So they're going to focus on the things that happen in that space. But at the same time, is in order to make all that happen, you've got to have the local businesses that have the ability to accept, transact, purchase, all of these different things. And all of that requires financial technology.
Yeah.
And I would be remiss if I left out the fact that we probably should be investing and saving some of this money. So the investment side of the house really does start to come into play as well. So it is so broad and it is so exciting.
So,
at least for me.
Well, it's exciting to me
too.
But moving into 2026, I mean, obviously technology is always evolving, always changing, always focused at making our lives easier. From your professional stance, where do you see financial technology going in the next couple of years?
So the biggest piece that we're seeing is the availability of funds is going to accelerate at a pace that we're not used to. And what I mean by that is that I still remember the day when someone would write me a check. I would take it to the bank. I would deposit it. It would show up in my bank account maybe the next day. And then it wouldn't even come out of the other person's bank account and show on their register for maybe a week.
Right.
Yeah.
So if you look at it from that perspective, where we're getting to in the next, I would say 2 to 3 years, and these technologies are already in place. So there's nothing new happening in the next 2 to 3 years, but really what's happening is the leveraging of it to give you instant access to your funds. And a lot of times it already feels like that. So if you look at Venmo, you feel like I got paid and I got my money now. Realistically, in the background, it's a whole bunch of companies going, okay, well, I owe you this and you owe me that, and we're going to move it this way. And so there's a whole bunch of coordination that goes on in the background so that you as the consumer have the feeling and belief and you trust them that you're going to have the money. So we're going to go from this level of trust being within the organization, moving over to a proof of work movement. So I trust that you're going to do it to a point of it's already done. I don't have to worry about trusting that you're going to do it. And I see that happening really, really fast here in the next couple of years.
So when it comes to lending money to people, then are there, the AI, everything that comes into it, I read that they're going to have the capability, they already do, of like doing a really deep dive into your finances to see exactly the type of loan that would be good for you or investment that would be good for you and your history in that, even if you have poor credit or no credit.
Yeah, I guess the risk for the lender too, right?
Yeah.
Yeah. Well, so one of the big things that has happened over the last 2 years has really been what they call cash flow underwriting. What does it look like? What does your bank account look like? How much money comes in? How much money goes out? Do you have multiple bank accounts? Do you have multiple incomes? You have multiple, like all the different pieces, really looking at the cash flow. And that was like the really hot thing for the last couple of years. What we're getting into next for lending is really contextual. Like not how much is going in and out, but what is it for? And what's on auto pay and what's manually done and why is it done and what's the variability? And I think that's the place where you're going to see the contextual lending start to kick in. One of my friends and one of the companies I'm on their advisory board for has applied for a patent. I'm not sure if they got it or not yet, but imagine this. You go into the store and you go to pay with your credit card. And when you go to pay for the credit card, it says, we have special financing for that particular item that you decided to buy. You may have a cart of 50 things, but we've got a special offer specifically for that brand new TV. Let's just throw a TV in there, right? And so for that item within your shopping cart, within the purchase, gets its own special 0% interest, whereas everything else still stays at your standard rate.
That's wild.
That's the type of personalization we're going to really start to see in some of the lending aspects. And I think it's going to be really interesting. Now, let me put a huge caveat in place here, though. and I know this is going to surprise both of you. None of these systems talk to each other.
Yeah.
No, that surprises me.
Well, it's just like the healthcare system.
Yeah.
Our hospital just switched over to Epic, which is a different way to track medical records and stuff. And they did that because they had 3 different systems where none of them talk to each other. So if you came in and saw my wife at the peds clinic, and then that child later was admitted to the emergency room, she would not know that child was admitted to the emergency room because that was on a different system.
So my question then is, if none of these talk to each other, kind of like what Andy's talking about with Epic, before Epic, there seems to be a disaster waiting to happen at some point. Is there?
I wouldn't call it a disaster waiting to happen. I
take it easy.
So my entrepreneurial side of the house goes, it's an opportunity for us to make sure that we are looking at the right data, that we are getting access and giving access, more importantly, as consumers, to that data for those decisions to be made. And there are companies that are available that do this aggregation. A former sponsor of mine and also friends, a company called MX out of Utah. They do a lot of this. There's also a company owned by MasterCard called Finicity that does a lot of this stuff as well. So there's a number of companies that pull this data together, but it's only a piece of the picture. And so what happens for these lenders is that now they have to start to piece together the puzzle to get all the information together to get really creative with these types of lending.
Yeah. I mean, I've already noticed the personalization via Amazon with I'm assuming it's an Amazon product, it may be a third party, but a firm that has a very low interest rate. And if you put something of considerable value in your cart, you will be prompted to the opportunity to pay through a firm. And it's a very simple application. Of course, they want you to do it, but it is like your name, your home address, your annual amount of money that you bring in, your earnings, and then it just sets a credit limit for you. And then you can just click pay for a firm and done.
Oh man, I didn't.
And then you have the option to select if you want to pay it off in 12, 24, 48 months and what that would look like. And then it tells you how much additional you'll be paying in the total price of the product plus what you'll pay in interest. The quicker you pay it off, the less you pay in interest.
So Ted, what is your knowledge of, I'm sure you have it because I don't, and that's no surprise to anybody, but the security aspect of it, the cybersecurity aspect of that, how are we going to be able to lasso that and know? I mean, there are always going to be bad actors who want to.
Yes, my mom wants to know because she is so concerned about anything that requires her to do something on her phone and her finances.
Well, because one of the hallmarks of that kind of stuff is getting you to do things really fast.
Yeah.
So I mean, how are we going to know?
Well, one of the comments that was made at a conference that I went to earlier this year, and it's all the name of the conference was Faster Payments, believe it or not. And so the comment there was faster payments, faster fraud. And that fraud is one piece of it. And that's when I look at fraud, that is the type of thing that happens without you understanding that it happened, without your involvement. But realistically, with all of the things that are going on, with the availability of the information, with the availability of the technology, we've entered what is being called a scamdemic. So reason behind that is now you just have to be extra diligent. Like I have an account that has a digital wallet for my digital assets, so cryptocurrency. So that's over there. I had someone send me cryptocurrency into that wallet. I got an email and it looked like it was from the wallet company wanting to validate information. My immediate red flag goes up. Why the heck are they emailing me for this?
Right.
And I think everybody's red flag should go up of if I get an email, if I get a phone call, if I get a text from somebody telling me that I need to take some action or I need to do something in order for them to proceed with something, that immediately is a red flag and just stop.
Mm-hmm.
Yeah.
Stop at that point.
They seem to prey on an older demographic too.
Right.
Well, and I think that's the whole thing is like anybody that calls you telling, and I hate to go down this pessimistic view, but if somebody's calling you to tell you that they need your help in order to do something for you that involves money, they may, but most likely do not have your best interest at heart.
Right.
Mm-hmm.
Now, if they call you and say, hey, we need you to come into the bank branch, or hey, we want you to log into your online portal and do this. We want you to go to the place that is a trusted location that you know to take an action so that something bad doesn't happen, then by all means do so. But never do it during a call, in an email. Always go out the secondary path that you normally would do to take an action with that institution, with that company. Like that is the biggest piece, because all these companies are doing everything they can to secure the data, but all it takes is one human being to make a mistake for it all to be available.
Yeah. Yeah, it's insane. Just like that movie. I don't know if you saw it recently. It's called The Beekeeper.
I've heard of it.
Statham.
Yeah.
And that the whole premise is this woman is managing this massive account for a nonprofit, and these hackers get into her computer and instant message her and ask her to log in. And while she's doing that, they download a program to her desktop and are able to track what she's doing. And then she hits a button and basically sends them the entire balance of this massive nonprofit. And the whole thing, but it is scary. And I understand, like, I give my mom a little crap and I make fun of her every once in a while because, she still is dedicated to her checkbook and she does pay some things online, but I can understand why she's scared, because it's hard to understand. And the simplicity of buying things virtually, like if I want to binge a TV show on a streaming service and it flashes up on my screen and I'm not subscribed to Peacock, it takes me 10 seconds to subscribe to Peacock.
Yeah.
I just got to scan the QR code and hit submit, and boom, they already have my credit card information stored.
Right.
So it's just like, you think about where your credit card information is. We're still very, conscious about having our credit card on us, but the amount of data that's out there already with your your credit card number, your name, the CID, all that stuff.
Right.
Yeah.
But you bring up a good point. People, like, let's say my age and up, or even a little bit below, you get to a point in life, and if you get ripped off or if you get defrauded out of all of your money, your options for remaking that are slim. I mean, you're on borrowed time, almost, But so, as a person of my age, if you need to get ahead and you need to, generate funds using fintech, what's the first step?
Oh, wow. That is a question that I've never been asked.
It's personal.
Well, I guess what's most secure? I mean, what gives you that warm and fuzzy that your money's safe?
Right.
I mean, obviously dealing with a local financial institution, there's a lot of technology involved in that. All of our banks that we work with now have applications where you can freely move money, raise your limit. I mean, all sorts of things via an application. But I guess Jenny's point, I mean, what is the best way to move forward into that world?
So, I mean, when you look at financial technology products, you do want to make sure that if they say they're a bank, that they are, or a bank or a credit union, that they are accredited, that they're FDIC, CUNA, or OCC regulated institutions. They have to disclose that. Example, Chime, which is very popular, has spent a lot of money advertising, got in trouble in the early days before they actually bought a bank, saying that they were like a bank, but had a small disclaimer saying that they weren't. But it really comes in. It is. But one of the great things is that we have built out consumer protections in the United States to a point where just about, and unless you're knowingly if you're knowingly doing it and you're very aware of it, most of the time you can recover from it. And the funny enough about that point there is the reason that we are in a state of not instant money movement, is that all of the organizations that are involved are wanting a little bit of time to figure it out. Because although we've got AI in place today, and just for everybody to understand, financial institutions and financial technology companies have been using what we're calling AI right now for over a decade. It's just, we've given it a really fancy name. So it's been going on in the background. It's just getting more complicated and more,
I'd say more
I guess the data that it gets is more, right? So we're able to make better computations. But I guess where I'm going with this is work with trusted institutions, work with trusted companies. If you decide you want to try something, don't go all in. I think that's the biggest piece, because I just got an email yesterday saying, open up an account with us and we'll pay you 10% interest on your balance. I immediately go, okay, so the standard rate for a major U.S. financial institution is 0.35% on a balance. They're offering 10 what's the catch.
Right.
Mm-hmm.
So in that piece of it, I did the research. And again, I always talk about doing research for yourself, but really dive into that piece of it. But if it happens to you, go to the company that you worked with first, the financial institution or the fintech. Do your best to get to that point. If you can't get to that point, then you go to the next level, which is reaching out to your legislators, because you're most likely not the only one that has happened to. You can also reach out to the CFPB, and they can help you as well, and the CFTC. So there's a number of consumer protection groups you can reach out to find out, and they love to get what's due to the consumer. So they're going to be an advocate for you as well.
Yeah, it's interesting. And this is a simple question, and you may have the answer to this, or Jenny, you may know, but I go to a store, retailer, and I go to the little machine by the checkout, and I tap my card, and it accesses the information from that chip in my card, and off I go. But not every retailer uses that. So my question is, why? We'll just say one of the most popular big box stores that's has a lot of blue in it, does not accept the chip reader.
Nope.
So how does that? Why do they choose not to do that?
It really is looked at as a means of what's called tender steering. Their goal is to get you to use their methodology of payment that they offer to reduce their overarching costs. Because every time you tap that card, that business is paying anywhere from 2 to 4% for each one of those transactions. And you may have actually seen it at a couple places where they had a cash discount type program, or you had a surcharge for using a credit card, that they've tried to recover and recoup some of that. But that cost is a big deal, and really wanting to maintain it. And believe it or not, the large big box retailer you're talking about is doing it more out of spite to really irritate the card brands for trying to push forward with technology.
Yeah. It's interesting because I always say whenever I go, these machines are all different. No matter where you go,
everywhere,
they seem to be different. It's just, I can tap my card. I can't tap my card. I have to insert my card. I have to swipe my card.
Right.
And it's crazy how there's no uniformity amongst all the payment methods.
So believe it or not, one of the most secure ways to make a credit card payment is using Apple Pay.
Is that right?
I
Apple
do that
Pay?
quite often.
Really? Oh,
it's in my wallet. It's simple, and I connect it to pretty much everything. My bills included, utilities.
So here's why. the number that is provided to the business is a representation of your actual credit card account. It's not the actual credit card number. That representation is only valid for that business from that phone for that purchase or future purchases, depending on how you've done the transaction. Meaning that if some bad actor gets a hold of that number somehow and they try to use it somewhere else, it's not going to work.
Good to know.
All right. So I have a question, Ted. This is going to be, you're going to say, why do I even bother when I ask you this? Because I really don't know. It's the simplest, most basic question. Can you please explain Bitcoin to me?
Oh my gosh.
I'm struggling with this too.
I can't get my head around it.
I have friends that are very involved in Bitcoin and alternate currencies, and I don't understand it.
I know. I sit there going,
I mean, I don't get how it's exchanged for, like, how you give me a Bitcoin if it was physical.
Yeah.
How you would give it to me, and I'd say, okay, the value of this is this, because it's not backed by. I mean, I don't even know if the U.S. dollar is still backed by gold. Is it?
No.
So, I mean, I just don't know what it's backed by and what the security is of Bitcoin.
So the fiat currency is backed by whatever the government says it's worth.
Okay.
So the government makes the rules of what the value is, which is why we see the inflation happen that we've seen happen. All of these different pieces, like the cost of everything has gone up. Well, actually, the cost of everything hasn't gone up. Just the value of the dollar has gone down.
Mm-hmm.
So that's the biggest piece to really look at it. When you look at digital assets, because there are many different, Bitcoin's the big dog, right? When you look at everything, it's the big dog. It's the one that everybody bases success or failure of a cryptocurrency off of. And the idea of a cryptocurrency is the fact that it is limited in quantity. And let's just be very clear with Bitcoin, it's limited in quantity. There's only so much it's ever going to be able to be digitally rendered through the use of the technology on that particular blockchain. So that means that the longer it runs, the less is available for people to acquire. So kind of look at it as and I hate going this route, but I'm going to simplify it, but it's a digital gold.
Mm-hmm. Yeah. Just the scarcity alone is what protects the value, I would assume. And it's just like anything, even like a collectible item, like a good bottle of whiskey. If they only produce so many, the value of it goes up.
Well, and it's funny you mentioned that because when there was the big NFT boom that happened a couple of years ago, that was crazy. Now, one of the things that's happened recently with the regulators here in the US is that they looked at these other cryptocurrencies that are called meme coins. You may have heard of them, the Pepe coin, the Shiba Inu.
Correct?
Yeah.
Well, I wasn't going to go there, but yes, the president also has one.
Yes.
But the way that the Securities and Exchange Commission is looking at that is that that's not a security. That is a novelty. So you have to look at it as equal to a Pokemon card.
I was just going to say a baseball card.
Yeah.
Yeah. Wow. Now, you know what, that analogy though, just what you just said is I understand it now. If somebody would have just told me that's, it's representative of, something that's scarce, and it's kind of like antiquing.
Yeah. Well, like even with Bitcoin, you could at one point, and they recently got rid of this, but you could manage your Bitcoin or your cryptocurrency via a ATM at Quickstar. And now I've noticed that Quickstar removed that option from their teller machines. Jeez. And I'm assuming that's just due to I don't know what it's due to, security or just a lack of viability in the currency itself. I'm not sure.
No, well, actually, the funny part about it is it was the Bitcoin ATM networks have not seen enough volume, because you're talking about converting a physical fiat item into a digital good, and that's really, really hard to do and to maintain. So although there are still some, I mean, I live in Las Vegas and we've got Bitcoin ATMs all over the place. I'll be honest, I've never seen a single person added other than myself. So
personal, every one of them.
so you look at that piece of it. That's a big piece of that as well. I think really what we saw earlier this year, the Genius Act got passed and really opened up the ability to leverage what are called stable coins, which are pegged to the US dollar here in the US, as a means in which to do instant and immutable money movement. And there's so many more things that go along with this. I'm excited to see how we start leveraging the programmability of these digital currencies. And what I mean by that is, if you could say, send Andy 1,000 USDC, which is a stable coin here in the US, send Andy 1,000 USDC when these 5 things have been completed and have been checked off by a trusted entity. So now, me as Ted, I don't have to go, hey, Andy, did you complete this? Hey, send me a receipt. Hey, Andy, did you complete this? Send me a receipt. So imagine if you will, I'm building a house and my contractor says, I need $500,000 to get supplies. You say, fantastic. We go ahead and we build out the logic and in the contract in there that when the materials reach the supplier and the person goes to pick it up, the money will be immediately delivered to the supplier and will skip over the contractor.
Oh,
it's interesting.
It's not a bad thing.
You'll be able to do those types of things. Now, the place that I will say that I see a big impact really when we start talking about these things is going to be the real estate market. Because a lot of the ancillary services that are there in place to provide proof and verification, to provide validity of items, will start to diminish. I mean, title insurance is probably going to be one of the first things that disappear when we start looking at leveraging these types of blockchain and digital currencies together.
Wow. This is all very interesting, Ted. I'm so glad you're sharing this with us. It makes my mind spin.
I don't know how you know all this, Ted.
Well, it just goes to show you he's hustling. He's
guru.
Doing what he need to do. He's getting out there and educating himself. And
and that's it. You have to be your own advocate, right? I mean, you said do your own research. You have to be your own advocate.
Yeah, this is great.
You definitely
stuff.
Do. Well, I get the opportunity to talk to large audiences. I speak at just about every fintech conference, so it gets me an opportunity to really see what everybody's thinking about and really just kind of blend it all together into a different perspective.
So, Ted, for our listeners, where can they find you online if they want to follow more of your content?
Oh, well, if you want to find out about Fintech Confidential, you can head over to fintechconfidential.com, and that will give you all of the content that we have there. If you want to know more about what I do and what my companies do, go ahead over to LinkedIn and go linkedin.com/in/TEDDHUFF. And that'll get you connected with me. Please reach out. I'm more than happy to answer any questions you might have.
Yeah, a simple Google search of Ted Huff.
That's what I did.
Reveals pages and pages of content that he has either created himself or has been guests on podcasts. So kudos to you, man. I mean, I didn't know. I think I bounced into your mom several years ago, and we were talking about something. I don't know how your name came up, but she's like, oh yeah, he does all that stuff. He does content creation and podcasting, and yeah, I should really look him up. And then it wasn't until your sister texted me and asked if you could come in and use the podcast studio that I started to kind of like Google you. And I was like, man, he's legit. This guy's legit. Mm-hmm. Like he's got a lot of going on. So kudos to you, man. You found something you were passionate about. You pursued it. You became a guru and an OG in the field, and just goes to show you that if you have a lot of passion and tenacity, you can do anything you want.
Best hair in the biz too, probably. Huh?
Best hair in the biz. Love it.
So I have to laugh, Jenny, when you say that. I actually received an award from a company I used to do work with.
What?
For that. So I'm just into my new studio, so I don't know where it's at, but it's a little crystal like award specifically for that.
That's so cool.
I will never receive that, but congratulations.
Right. Well, Ted Huff from Fintech Confidential podcast, involved in all sorts of things. If you are a local financial institution or you're just curious about what's going on in Ted's world in fintech, go ahead and hit him up. Just Google him. There's a lot of places you can find him. Subscribe to the Fintech Confidential podcast. It's on all your major podcatching applications that are out there, just like the Grow Clinton podcast, Jenny. Everywhere. Ted, thank you so much. Have an amazing holiday. If you're back in town, hit us up.
Thank you. I appreciate you guys having me on. It was a lot of fun.
Thanks,
What do you got going on? Oh, it's Friday. I didn't make my Friday jingle.
I was waiting.
So I geek out over AI, Ted. I love it. And the fact that I can just punch in some lyrics and generate like a little auto-tune song with some background music just geeks me out. So I made one for our monthly member giveaway, and now I got to make a Friday song. Because
I'm waiting.
Yeah.
If you'd like me to just sing it live,
okay,
nobody,
Jenny, here
nobody
you go.
wants that.
I'll cue you up. All right, everybody. Thank you for listening to another episode of the Grow Clinton podcast. Again, Grow Clinton is a nonprofit organization. Our only source of revenue to support all of the things that we do and all of our programming is through investment from our members.
Right.
So if you want to become a member of Grow Clinton, go to growclinton.com or give us a call here at the office, 563-242-5702. And Jenny would love to talk to you about membership.
I would.
Enjoy the remainder of your Friday. Enjoy your weekend. Until I talk to you guys soon, stay classy, folks. See ya. Thank you for listening to the Grow Clinton podcast. Be sure to subscribe and follow us on all your socials. Until next time, see ya.